name is Charlie Comber, and I'm with SlickTrade.net. Today we're going to be covering price action candlestick patterns. This will be the third of the series, and we'll be covering the Harami. As always, we must start with a disclaimer. Feel free to pause the video to read through the entire disclaimer. But when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose. Trading involves a real risk of loss, and past performance does not ensure future results. So, what is the Harami? The Harami helps to define the end of a retracement or muted reversal. The word Harami means pregnant in Old Japanese. And when you see a Harami pattern, the first candlestick is the mother, and the second is the baby or child. If the baby candlestick is not entirely within the body of the mother, then it is not a true Harami pattern. Typically in a bullish Harami, the first bar closes lower than its open price, while the second bar closes higher. With a bearish Harami, the first bar closes higher than it opens, while the second bar closes lower. And just a special side note here, some also refer to the Harami as the inside bar. Okay, so when you're going through this lesson here, you may see it to be familiar if you have learned about the inside bar before. Okay, so how do we trade the Harami? The Harami is usually traded best when the market is in a defined trend. For example, if the market has been in a downtrend, the appearance of the Harami could be an indication of the continuation of that downtrend. In a bullish Harami, we would buy or go long after the completion of the second candle, or that child candle, baby candle. In a bearish Harami, we would sell or go short after the completion of the second candle. Okay. In this example here, we have a downtrend that's occurring. Here, we have a retracement, and then it continues down. However, there's no Harami visible here. Okay. Yes, you could consider this to be a Harami. See that second candle? That would be the baby or child. Okay. This would be the mother. And we are following a downtrend. Okay. So technically, and then this child or baby, it is within, the body is within the body of the mother. Okay. So just something to think about. Didn't even see that actually when I was making these slides, but this is the example that I wanted to show. Okay, right here we have the mother candle, and here we have that baby or child. Okay, this candle body is within the mother body. It's very close. It's right, almost even here. Okay, some of them you will see to be like that. Okay, and I have some more examples coming up too. But what you would do is you'd enter right below that second candle, or that child or baby, okay? Your stop loss would be put at the high of these two, okay, of the Harami candlestick pattern, okay? So, and as you see, this is the end of the retracement. We had some consolidation for a few days. 5. So five days after that, you would have just had your position going into profit, going out of profit, going into profit, going out, and then finally it broke, okay, and continued its downtrend. So here are some more examples. In this example to the right, we see an example of the Harami following a defined downtrend. Our expectation is that there will be a continuation of the trend. At this point, we would enter just below the child or baby candle, following its full formation. our stop loss would be just above the high of the mother candle. Now, in the previous example, I said the mother or child. If the most of the time, from what I have personally seen, okay, is that the mother candle is higher in a defined downtrend and lower in a defined uptrend. So that's why I put that's where your stop loss would be. However, sometimes you will see where that tail kind of, there's either there was a news release or there was, something going on that made it, to be a higher or lower tail on the actual child. Okay. So if that's the case, you could still go by the mother as a stop loss, but in that previous example, your stop loss would have been hit in that next candle, and then it continues. So that's up to you, however you feel is appropriate to trade with your trading style. You can go just above the high of the mother, or both of the candles. Okay, so here is the end of our retracement. Price went down, it came back up, it didn't break that previous high, and then even continued lower. If you had a trail stop going, you might have gotten stopped out here. If you're trading manually, or if you didn't have a trail stop, if you just had your stop loss in place, then you could have gained even more in this continuation of the trend. Okay. In this next example, we see two examples of the Harami following a defined uptrend. Our expectation is again that there would be a continuation of the trend. At this point, we would enter just above the child candle, following its full formation. Our stop loss would be just below the low of the mother candle, or a combination of the mother and child there. Okay, so in this example, here's the mother, and here's the baby or child within. You can see that the body is within that body. Okay, you would enter just above that child candle. Your stop loss you would set below, and actually that child candle even went a little bit lower too. So again, it's up to you. Look at it. I usually personally set my stop losses on most strategies, majority of strategies, at previous support and resistance. So you could always use that method as well. But here we have, the next day, price broke, continuous uptrend, continued. Here we have another one. Here's your mother here. Here's your baby or child here. You set your stop loss down here, and price continued up. Okay. We've got one more example for you guys, and again, this is a Harami following a defined uptrend. Our expectation is that there's going to be a continuation of that uptrend. Alright, we're going to enter. Here's our mother right here. Okay. Here's our uptrend. Here's our mother. Here's our child or baby. The body is within the body of the mother. And we would enter just above. You could enter right around here above the body, or you could enter above the actual tail, which would be here. Okay, you miss out on a little bit of profit, but again, it's whatever you feel comfortable with. Our stop loss would be just below, either just below the mother, just below both the mother and child, or at support, which support, as you can see here, with this template, is right here. Okay, and it's right at that low of both. So here we have some consolidation. Your order wouldn't have been filled, or you wouldn't have manually entered until it actually broke, which was here. Excuse me. If it was just above the body, and if it was just above the tail, you would have entered until here. So about 2, 3, 4, 6 days later. Okay. and here the trend continues up. We have a little bit of a retracement down, but it doesn't break where our stop loss would be at, and that price continues up for a bit. Okay. In my next lesson, I will be covering the engulfing candlestick pattern. Hope you guys are enjoying these. If you did not see my previous pure price action series, I highly suggest you check it out. I also provide the template that you've seen in all of my price action series presentations, and it's free for you guys. So I mean, check it out, download it, and hopefully these lessons are helping you guys out with your trading.